More controversy coming at you way from your old buddy Josh when it comes to financial planning and how the green lobby has seemed to have just really got its tentacles deep in the financial planning realm. So I'm looking at a fund for one of my clients, a nice, very sweet lady. She's got a lot of money in the Fidelity Growth Fund. And my concern was that if they have a large capital gain distribution, is she aware of that? And how much is it going to cost her in taxes? So I'm looking it up. And again, she's got a pretty big holding in this. I also want to see if the Fidelity Growth Fund, what the structure is, fees, performance, Morningstar ratings. I do look at Morningstar ratings, and you should too. And I've gone over that a couple of videos. And I just want to see if there's anything there we might want to do before year end. And so and behold, I go to Morningstar, which is what I do because I like Morningstar, and I come across, this is the Fidelity Growth Fund, by the way, 5-star rating, good fund, has done incredibly well. U.S. stocks, 91% U.S. stocks. I'm not sure what the fees are, and I'm sure the fees are pretty low because it's a non-broker sold account, and I'm sure we can look at it real quick. I'm going to go into this fund a little bit deeper next here. But anyway, what do I find? Morningstar sustainability ratings. And if you see right there, there are 5 globes. 5 globes you can get. And the Fidelity Growth Fund only gets 2 of the 5. Oh, no! Oh, no! Sustainability mandate? No! There's no sustainability mandate either. It's below average in terms of the sustainability. And how do we look at sustainability according to Morningstar? The Morningstar sustainability rating is a measure of how well the holdings in the portfolio are managing their environmental, social, and governance risk and opportunities relative to the Morningstar category peers. And they have a sustainability rating for funds methodology from Morningstar. The rating calculation, I'm embarrassed by this. I'm embarrassed. This is infantile. Portfolio ESG, the Fidelity Growth Fund gets a 51.38. That's a portfolio ESG, but the sustainability score is only 44.98, which means it has a controversy deduction. Literally, it says controversy deduction of 6.4. All right, so basically their portfolio ESG is 51.38, but because they have a controversy deduction of 6.4, they have a sustainability score of 44.98, which is below average, which again, you only get 2 of the 5 globes. Ooh. Then they got Morningstar carbon metrics, but they do get a green leaf, as you can see. Look at that green leaf. Oh, it doesn't make you happy. Of 4.61. And their carbon risk score is only 4.61, which is pretty good because the score goes from 0 to 100. A lower score is better. A portfolio's carbon risk score is the asset-weighted sum of the carbon risk scores in its holdings, averaged over the last 12 months. The carbon risk of a company is its Sustainalytics evaluation of the degree to which the firm's activities and products are aligned with a transition to a low-carbon economy. The assessment includes carbon intensity, fossil fuel involvement, stranded asset exposure, mitigation strategies, and green product solutions. This is embarrassing. Fossil fuel involvement. It's only got 1.73%, which is good because remember, 100 is the worst. If you have 100% fossil fuel involvement, you're evil. Evil, I tell you. How do they figure out fossil fuel involvement percentage? Fossil fuel involvement percentage is a portfolio's asset-weighted percentage exposure to fossil fuels. Companies with fossil fuel involvement are defined as those in the following industries: thermal coal extraction, thermal coal power generation, oil and gas production, oil and gas power generation, and oil and gas products and services. And so they get a green leaf for being low carbon risk and low fossil fuel involvement, but they only get 2 out of 5 globes for being sustainability because they don't have a sustainability mandate and they have a controversy deduction even though they only have 1.73% fossil fuel. Did you notice fossil fuel involvement is only oil and gas? All right, so let me ask you a question. Is that good for the environment or bad? Tell me, hydroelectric, is that good or bad for the environment? Well, it's got to be good, right? Because if it was bad for the environment, it'd certainly be under Morningstar's sustainability or fossil fuel or something like that, right? Because it's bad, right? I mean, so if it's good for the environment, it inherently can't be a fossil fuel, and is bad for the environment, and inherently must be a fossil fuel because hydro is a sustainable source of electricity. Did you know what Proposition 3 in California was that just went down close just last, 2 weeks ago, 3 weeks ago? Well, there is a hydro plant in some county in California, not Orange County, but around that way. Ventura? No, I can't remember. But anyway, some county in California, they have a hydro plant that is horrible. There's no other way around that, all right? They dammed up some of the lakes, killing the fish, eroding the beaches, not giving any electricity. The silt has filled up so much that there's no water flow hardly at all to generate the turbine, which the flow, what's called a head. So what happens is a waterfall that falls into a turbine, which turns the generator, which generates electricity. There's not enough of that because the sediment has built up. This thing's falling apart. It's not containing much water anymore because the sediment is so there, the silt. And so essentially what's happening is it's going to flood. So what happens? Well, they said we need to get rid of this. They've been talking about this for not 1, not 10, but 20 years, how they need to get rid of this hydroelectric plant. But I thought hydro was a non-fossil fuel, so it must be green, right? So they proposed a proposition to give them $80 million by selling bonds, $80 million this year to start the process of dismantling this hydroelectric plant. Now, Bruce Babbitt, who used to be the Secretary of the Department of the Interior under Clinton 20 years ago, had a crane in this place showing that they were going to start moving this off production. They're going to move it offline. So this is 20 years ago. Bruce Babbitt was there with a crane moving some land in which to start the dismantling of this hydro plant, which everyone recognizes is not good, is a disaster. 20 years hence, we still haven't moved it yet, and 20 years hence, the fish are still dying. It's not giving us, it's getting a whole lot less electricity, and the beach is eroding as well. All bad, but it's still there. So California said, let's issue bonds. Now, this was just part of a larger bond issue. All right, so they're going to issue, I think, like $8 billion in bonds, of which $80 million was going to go to this, get rid of this hydroelectric plant. Again, doesn't give you much electricity, but it's hydro. Must be so good. It certainly wouldn't violate the Morningstar sustainability ratings, right? Because it's hydro, it's green. Anyway, but guess who opposed it? Interesting. The Sierra Club opposed it. Why would the Sierra Club oppose getting rid of something that is inherently not a green structure? Interesting, because you're not getting electricity from this guy. You're just not. You are killing fish. You are eroding the beach. And I mean, it's just costing money. And it's going to be even worse, more environmental damage when the floods start happening more and more because it cannot contain the water that was supposed to happen because of sediment. But the Sierra Club and other greenies oppose this. Isn't that interesting? I wonder how Morningstar sustainability ratings would look at that hydro plant. And so what's my take on this? Well, my take is, this goes back to my thing on Vanguard the other day. You have these activists funded by Tom Steyer, George Soros, these big wigs who got tons of money, and these guys have the ear of Morningstar. Don Phillips is the founder of Morningstar. I have no clue if he still runs the company, but he runs with these rich guys for sure. So you got these big wealthy activists, Tom Steyer, Soros and his crew. You got the, what's his name, Thomas Friedman from New York Times. All these guys are pounding around, and they all want more and more and more green, and we're going to show our green street cred by having sustainability ratings. Vanguard's going to have more and more activism for climate change, whatnot. Who gets affected by all this? You think Tom Steyer with the higher electric bills gets affected by this? You think Thomas Friedman with his 10,000 square foot house gets affected? No. All this is done on the back of middle and lower middle class people in the United States, because they're going to have higher electric bills, they're going to have higher home heating costs without question. And you can see this part and parcel. What happened to spot prices on natural gas last February in New England, northern New England? Well, they went through the roof. Why? Because there's not enough natural gas flowing into northern New England for the demand, given the cold winter that they had. There wasn't enough. And so when you have higher demand and higher demand and higher demand and supply that's actually limited to actually dropping, because Andrew Cuomo would not let pipelines go through New York into New England, which means they got to get more of their home heating, either gas or fuel from Canada, from New Brunswick or Quebec or something like that. I think it was Quebec. And there's only so much hydro. Then their prices on natural gas go through the roof. And presumably in economics we call it when you're trading something off. So if I like bacon, the price of bacon goes to the roof. For pork bacon, I might go to turkey bacon. They call it, I can't remember what it's called, but basically I can't have that substitute. It's called substitution effect. So in this case, with substitution effect, given the price of the thing I want has gone through the roof and I can't afford it, what will happen to the price of the other thing, which I don't quite want, but is better than not having anything? Well, that price can go up as well because demand has gone up. And so the substitution effect. So now I can't afford natural gas, so I'm going to go buy more propane. I'm going to go buy more home heating oil. I'm going to go buy more firewood. And the substitution effect in economics, those things increase in price too because the demand is now increased because the demand for higher and higher and higher and higher natural gas prices are, the price is gone sky high and the price is not affordable. So I'm going to use that money to buy something else. It's called substitution effect, which is exactly what happened here. So whole point is, Tom Steyer, he can afford all this stuff. George Soros can afford all this stuff. Thomas Friedman can't afford all this stuff. I mean, you can name Republicans too. There are a lot of green Republicans, and they all got money. They can afford this. Who can't afford it though? And this is near and dear to my heart. If you grew up in Maine and you don't know what it's like to be cold because the cost of home heating oil, and they couldn't pay the bills, and you had to turn on the oven hoping to praying to God that you had and if the government electricity, your electric was working, so you could open up the thing for your oven to heat your home, and you came home from school, and it turns out the electric bill's closed too, and your house is actually colder than when it was outside. Don't tell me that these rich guys care 2 iotas about poor people in Maine or Georgia or anywhere you are. They don't. They just like the street cred to be able to say, look at us, we're so green. We want green. So let me just tell you something else too. Yes, I'm on a rant, don't care. Morningstar, they have this ESG, Environmental Social Government meeting in Chicago, of all places. And they invited people all over the world, investment companies, investment consumers, whatever, all over the world. How do those people get there? Take trains, electric trains? No. Take bikes? No. They fly. They fly. They fly. They fly. They fly. They fly. So for their trip from London to Chicago, that one trip and back is 33 kilowatt hours per day on average for one seat. Coach, not your private jet, just one seat coach. So that person who goes from London to Chicago and back uses the same, and that one flight now, well, 2 flights, round trip, uses the same amount of electricity as 3 of my 6 family members over the course of a year. Just FYI. The amount of that usage of electricity, in this case power, 33 kilowatt hours for the course of a day over 1 year. That flight from London to Chicago uses the exact same amount of power as my family does, 3 of my 6 in 1 year. There you go. So keep your freaking your green stuff and take it off. And they're not going to listen to me because they're virtual signaling to each other. I get this, but I don't care about Morningstar. I don't care about what's his name, Steyer. I know he's got he'll kill me with his wealth. I get that. I just care about the middle and lower class people who can't afford this stuff. And seeing it just get more and more and more and more permeating into the financial planning / investment scheme is just bad, my friends. It's bad. It's not helping anybody. It's not, other than the rich people can afford it. And that's bad for everybody because investments are what helps moderately to low income people get out of that. By investing in good companies that grow under a capitalistic market. Yes, we're far from it in the United States, but how we can get out of poverty is by saving money and allowing it to grow at a better rate of return than I can get at the bank, recognize the risk involved. And to put stuff like this on there, it's only a matter of time. It's only a matter of time for there's more and more penalties for you to invest in a company like this because of their lack of green ESG. And again, going back to what we know with Vanguard, being able to get on the board of directors or have voting power with Vanguard SSGA. We know SSGA, the epitome of virtue signaling. And I don't know much about BlackRock in terms of that. My presumption is the same thing. But this is bad. And I'm just telling you, man, you got to watch out because it's only going to get worse each and every year unless somebody says enough of this crap. This is ridiculous. Companies are in fossil fuel are not evil. Companies are, do you think Google gets all their energy to put all this stuff on YouTube? Look, I love YouTube. YouTube's been wonderful for me. I am not going to bash them at all. How do they get their energy to put this stuff? I mean, this would be, where's electricity come? Where's it come from? You think it's coming from solar panels? You think it's coming from, was it Sierra Nevada, Ajo Desert, something like that? I mean, those mirror solar thermal plants. You think it's coming from that to put all this stuff? No, they're getting it someplace. It's not just photovoltaic or solar thermal. Google is using a significant amount of electricity, which is generated from something, either fossil fuels or solar, hydro, or a combination thereof. And I can guarantee you Google uses a lot of fossil fuels as well. It says Amazon, but they're not going to be part of the green. They're not going to get a controversial deduction for them not being green. I mean, it's just crazy. It's very virtue signaling. All right, well, that's it. That's just one to yap on. It bothers me. I guess if you don't know what it's like, if you don't know what it's like not to have heat in your home, it won't be as meaningful to you as it is to me. And that's not just, that's the only thing I can say. If you don't know what it's like if you don't know what it's like, I can see that might not be a problem for you. Trust me, man. There are people out there who are cold and are going to get even colder this winter, and they can't afford their heating oil and the firewood. They just don't have the capability to keep a house warm. And if we keep going down this road where we're making villains of people who provide fossil fuels, that's bad. And I hope these rich guys can at least think about what they're doing to people that don't have the money that they do to have a voice for Don Phillips and Morningstar and the Vanguard. I hope they realize there's a group of people out there, a significant voting group of people who can't afford what they're promoting. They can't. They're not gonna, because they don't care. I get that. Anyway, all right. Well, I hope you find this helpful. I'm sure you'll get ticked off by it, but I'll talk about the Fidelity Growth Fund here in just a second, so stay tuned. Thanks.